From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 12, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the USD currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. Now, this week's calendar is quite full of high-impact news with interest rate news and jobs data, so you'll want to be sure to check your financial calendars for the latest releases throughout the week and when they impact you and your trading wherever you are in the world. So let's get started here on the USD CHF, the US dollar versus the Swiss franc. Over the past several weeks, we go all the way back really to the beginning of November. We began an uptrend here for the US franc all the way from the bottom of the blue trend line where it touched down here into the mid-9500s and made a rally all the way up above the parity level, above the 1.0 level. It's just been sitting up there between, let's say, 1.0050 and 1.0200. That's the black box that you see up there at the very top right-hand corner of the chart. It's been bouncing around in there. Last week we saw it touch down into the yellow shaded area with some news. It rallied back higher, all the way back to the top. So the question of the week will be, on interest rates on Wednesday, if we get that raise of interest rates on Wednesday from the U.S. as expected, will we finally look for the break back above the 1.0200 level, a break of the orange zone, and a continuation higher? And, of course, the question is, what's going to happen prior to Wednesday before we get that interest rate news? Will we see a pullback down here towards the green shaded area, or even the yellows shaded area as support? Let's go ahead and zoom it in a little bit. Down towards the bottom of the black box. Will we see a pullback before that news? Or will it just kind of hang out inside this orange shaded area, finding resistance, and then eventually break back above it? We'll have to wait and see. But if you're looking to buy anything, in my opinion, you don't want to buy something at the highest peak high. So buying right now just doesn't seem like a good idea. If you're even considering buying because of the interest rate news later this week, this is not the time to do it. You either want it to go back down to the green or yellow zone towards the blue trend line, or eventually break above that yellow zone. But buying under resistance just doesn't seem like a good idea. And I don't think there's any real significant reason at the current moment to go short, but I just don't think buying is a good idea. So that what we're looking for this week is a dip back down towards the green or the yellow zone, or a break above the orange zone before we look for an opportunity to go long here on the dollar franc. Moving over to the euro dollar, very similar yet opposite situation here on the euro dollar. Of course, we've been in a downtrend. That's something that we want to make note of. Last week, again, with some news, we saw a spike higher all the way up. ECB news spiking all the way up into the 1.0800s. Rapid reversal all the way back down towards the 1.0500s. Over the past couple of days, Friday and so far this week, we've been settled out into the support zone that we discussed in the live trade room on Friday. The green shade area, 1.0545 to 75 is that green zone. We have a couple of things to think about this week. If we're going to look for the continuation lower here for the euro dollar, if it's going to continue to go lower, then we need to see, of course, the interest rate news out of Wednesday react, the market respond as expected, which would be a strengthening for the U.S. dollar, sudden strengthening. It could be short-lived, but definitely sudden strengthening would be what we would expect to see. If you're looking to go short, it always makes more sense to go short, to me, at a higher price, whether it's the purple zone or even the blue zone. You're looking to go short at a higher price, not the lowest price, because right now we're at the lowest, a multi-month low down here into the green zone. So it doesn't make sense to go short at the lowest price. We need it to either go up or break through this green zone, through the 1.0545 level before we can look for it to go lower. Look at that again, breaking through. Take a look here. We've seen 1, 2, 3, and now the fourth time pushing underneath 0.545 without staying underneath it. So what's a breakout? We'll discuss that later on in the trade room. Looking for the breakout underneath that green zone, we need to define what a breakout is, and we'll do that later on in the trade room today. Let's take it on over to the GBP USD. We have some news out of the UK this week too, some interest rate news, some jobs data, so we want to pay attention to that. It's been kind of in a pattern. We've discussed this in the live trade room, the blue trend line, the rising trend, but there's been these three instances where we've taken a fall back down towards that blue trend line. We got to watch that news this week. If it's positive for the UK, any positive news for the UK, we could be looking for this to take another run all the way back up to the 100 period moving average, sitting all the way up here into the 128 level. The green line coming down from the top of the chart, that's the 100 period simple moving average. Haven't touched that yet, so maybe we'll come back up there and challenge that once again within the pattern. Otherwise, a swift fall, positive movement for the US dollar on interest rate news mid-Wednesday. We could be looking for this to break the blue trend line and start moving back down again. Remember, we always have the Brexit looming as well, but we're definitely watching this pattern setting up here. Overall, a bearish pattern. Bearish in the past week, but bullish over the past several weeks along the blue trend line. We definitely want to watch for indications in both directions. A breakdown of that blue trend line, I think we could be looking for some further movement lower, staying above the blue trend line, and within the rising trend, we could be looking for another rally back again, like I said, towards the 100 period simple moving average here for the GBP USD. Moving on over to the USD CAD. Here's some interesting things happening going on here. Again, speaking of patterns of trends, look at the blue trend line. Of course, we saw congestion ranging, mostly rising along the blue trend line at the beginning part, made a swift push back down, touched the blue trend line, then it's been kind of rising along here, ups and downs along there, swift push back down to the blue trend line. So there's the pattern right there. Rising blue trend line, 2 times now, coming down swiftly towards the blue trend line and the 100 period simple moving average. So the question of the week will be, are we going to see interest rate news out of the U.S. cause this to turn around and go back up? Are we going to see continued influence of rising oil prices causing this to go down? Rising oil prices causes the U.S. CAD to go down, and that's what we've seen over the past couple of weeks, now sitting on top of the blue trend line. We have some harmonic patterns coming into play here. If you are a student of harmonic patterns and the Fibonacci collaboration between different Fibonacci levels that you would find with harmonic patterns, we have some of that coming into play here around the blue trend line 100 period moving average. We'll look at that later again in the live trade room today as well, so please join us then. But critical decision point here for the US CAD into the 100 period moving average blue trend line. If it breaks, if we continue to see the Canadian dollar strengthen or any weakness out of the US, we look for this to go down. If the Fed surprises and does not raise interest rates, I think we look for a dramatic move against the US dollar. So watch for that. However, positive movement on interest rates for the US dollar, we look for support here. If oil suddenly decides to turn around and go back down, we look for some movement higher here for this currency pair. We're at a critical juncture here, decision point for the trends. Are we going to look for the continuation of the downtrend, the red trend line, or are we going to look for the return of the uptrend here into the blue shaded area or blue trend line for the US CAD? We'll see as we go through this week. Taking it on over to the USD JPY. I don't think anybody's going to argue this fact. It's an uptrend. We are at the highest peak high of the uptrend, multi-month high here into the resistance level, into the 116 level. Critical decision point here. If it's going to continue to go higher, it needs to break through that resistance level. Let's go ahead and zoom it in one time here on the daily time frame. Last week we saw it bouncing around inside this black box. We're above it now. Here's some interesting setups. If we don't get the interest rates, if the Fed decides not to change interest rates, I think we look for the push back down. I think it's got to break back underneath the pink zone and start working its way back lower again. If they do change, of course, as expected, maybe a continuation of this rising trend. So if you're going to buy anything, I always say don't buy it at the highest high. Right now we're at the highest high. Don't buy it at the highest high. It doesn't make any sense. Doesn't matter what you're buying. Used cars, candy bars, t-shirts, don't buy anything at the highest possible price. You want to wait for it to go on sale. So if you're going to go long, you want it to go down, likely to the pink shaded area, 114.90, 114.55, before you would look to go long. So it either needs to go down to the pink zone or break above the blue zone before you would look to go long here on the US yen. Those are the two serious factors about going long. Going short, I don't see any reason to do that right now on the US yen. Take it over here to the AUD USD. Some significant things happening here. We're in a period of congestion. We're into resistance. We traded this multiple times last week, selling rallies into the resistance, 74.75 to 7,500. We sold it multiple times, made some profit, break even on a few trades. It's just a very interesting area. The red trend line, something interesting that we've been discussing in the live trade room. We'll discuss that again today, just to reiterate that again. But green shaded area between 74.75, 74.90 is the key point. Let's go ahead and zoom it in on that area where the blue box is right there. Take a look. Today included 1, 2, 3, 4, 5, 6 days here. Then 3 days back here. So 3 days plus 6 days, finding resistance into this green zone. That should alone tell you that you don't want to go long right now, because 6 plus 9 days have found resistance into 74.75, 74.90. That alone should tell you don't go long right now until one of two things happens. It either goes down to support or breaks through resistance. The other side of that is, if you're not going to go long, what are you doing? You're looking to sell. You're looking to go short. Raising of interest rates on Wednesday for the U.S. would cause this to maybe make another run short again. Rising interest rates, good for the U.S. dollar. We look for this to fall off the green zone, fall off the red trend line, break the orange zone, break the blue zone, and start working its way lower. I think it's the same. It's status quo. If you were around last week, status quo here. Selling the green zone. A break above it, of course, is the risk. Your stop loss is above it, like where that little red line is. But I think it's status quo. I don't think there's anything to change our mind about this on the AUD USD. And a similar situation over here on the NZD USD. Blue trend line, very important. We discussed that a lot last week. Long-term trend, we are underneath that trend line. Take a look there. Blue trend line coming up from the bottom. The blue circles show you every time it tapped that blue trend line. Once, twice, 3 times. Then we broke underneath it, rallying underneath it now as resistance. So now that we're rallying underneath it as resistance, again, very much like last week, I think it's status quo. 1, 2, 3, 4, 5, 6 days here, 1 day back here, finding resistance. This is not your time to go long. You should be considering, at least, I think, going short here into the yellow zone. The only reason to go long would be maybe a breakout above that yellow shaded area. Maybe a dip back down here to the blue zone, but I don't think there's any reason to go long right now. We're looking at shorts. We're looking at selling the yellow zone. Again, very similar to what I did on the Australian dollar. Your stop loss is above the yellow zone. Now, I know that this wick may be stuck up here and would have taken you out, so maybe it's important to look at last week's high and say, let me see if I can get that selected here. Let's look at last week's high and maybe grab this and put it above there. So if that makes more sense to you, of course, the deeper it gets in the yellow zone, the smaller your risk would be for that. I think that candle right there gives us reason to believe that we should be looking to go short anyways here for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.